let's take a look at pound here. Just run through kind of a thought process on this. We're on a 4-hour. Let's go to a daily. Pound, I think, is poised for a move lower. Number one, we've had quite a bit of fundamental stuff on the pound in terms of what they're doing. So that you guys know, the British government has set in place a lot of austerity measures. Meaning, when we say austerity, what we mean by that, guys, is that they are planning on on seriously reducing their national debt. Okay. Well, when you reduce federal debt, when the sovereign debt of a nation, the debt that is held by countries, not by individuals or by banks or anything like that, but by the actual government itself, anytime you take money out of that process, then you slow growth. Okay? And if you think about it in terms of the big pile of money that exists, the government takes their chunk of it, and then they tend to redistribute that in the form of some sort of payment, or for government workers, or for subsidies for something that people buy, like food stamps and things like that. All right? If the government decides now that it's not going to use the money that it confiscates from the people and give it back to them in the form of subsidies, but rather they're going to confiscate that wealth and use it to pay down debt, and they are then going to cut the workforce or cut the spending that they're doing, that money now no longer flows to the economy. And that has a massive deflationary effect on the country as a whole. And that would tend to signal high deflation or a strengthening of that currency. The problem is that the government, in knowing that this happens, people are not stupid. They know that this is going to happen. What they have done is they have also combated their austerity measures with large printing of pound sterling, in an attempt to inflate their currency, and in an attempt to basically create inflation. So they have a two-pronged effect. What Great Britain wants to do is they want to increase their they want to reduce their federal spending, so take money out of the economy, and then inflate their currency to the point that it makes their exports more appealing. So they intend to try and grow their way out of this debacle that they're in. Now, this doesn't work for every country, but it does appear to work for Great Britain, and they have, as to right now, very effectively controlled an increase in their inflation. And it looks as though all the writing shows, and writing on the wall says, that Britain has every intention of continuing to inflate its currency to the point where its exports become more appealing, while at the same time seeking to cut a massive government shortfall in income, in revenue from what it taxes. So with that knowledge, with the knowledge that the government has every intention of moving forward with that, in conjunction with what we see technically here, gives us a bearish bias. Now, this doesn't mean that there aren't short-term rallies that will present large opportunities for us to capture, but we always want to understand that in the backdrop of this, there is a government somewhere that has every desire to inflate away its problems. Now, I'm not going to get into all of the additional problems that this causes. We all know that this is extremely dangerous to be doing stuff like this. But if a government is going to do it, then you had better bloody well realize that it's happening and do something to to put yourself in a position to take advantage of that. So if we know that that's going to happen, or we anticipate that all the writing on the wall says that's going to happen, and we see technical analysis that shows us a decline in that market, then what we want to be doing is looking for key areas to look to get short. Now, if I go ahead and bring this in and show it to you, you're going to see the support level here that came in. Support, support, boom, that support gets broken. We now retrace. We have another support level just a little bit lower, right around here. Okay? And after that, if we go out to a daily chart again, after that support level is violated, then we go all the way down here. Then we go all the way down there. Okay, all the way down to 142s. So it's a real threat here, guys. We are on the precipice of falling off a cliff in the pound. And if it happens, which I fully expect to see continued devaluation, and assuming that America holds to its current fiscal policy of doing just enough to keep us afloat, then that means that the pound is going to inflate faster than the dollar. And I think that as I'll be presenting in my in a series of trainings that I'm going to do this year, I expect to see deflation here in the first, probably maybe even the first year. Over the next year, we see a more deflationary pressure here in the United States, which would be a strengthening of our currency rather than an inflation. We may also see that in Europe, but I'm not as confident there, and I'll explain my rationale as we move forward. But as you can see here, once we get under 153.32s, it's just waterfall from there. So if I go back to a 4-hour chart here, you can see the break below, close below. Now the market has retraced. The level that we'd be looking at for a short position is actually here.